Hello traders, good weekend, happy Saturday and wonderful morning, noon, afternoon to everyone. Welcome to the second session of the live trading together. Well, it's not really live because it's a weekly review, but we prepare the, I'll just move it here so it doesn't interrupt me. We prepare the entire week together. And okay, so we're good here, we are good here. All right, so please let me know that you can see my screen, and we will start. I have some news for you for today. Joseph, I like that. I like that, and I say sorry to Mr. Jeff Beck. Alright guys, so we begin our live video right now, and the new concept a bit I decided to do this videos would be simplify the things for you. Okay, so for those of you who are with me in the Traders Academy Club, you know everything I'm talking about, the cycles, all the entire idea. For those who don't and watch this video for the first time, this could be too complicated, too scary. So what I did is simplifying the things for you and making it this way. Okay, so I prepared the entire chart which I would want to explain, and we will go over that, put the lines, put the levels, put the explanation, and prepare the entire week for you. So thank you for joining me. My name is Vladimir Ribakov from Traders Academy Club. I hope you will enjoy the session. I know I will. That's why I do that very for the second time, not every week, with big pleasure. Very honored to be here in front of you guys and show you my chart. If you do like, don't forget to hit this button. It helps us to promote the things on the channel and the community, and your feedbacks below the video of course are very welcome. For those of you who don't know me and would like to, my links below to my blog and the Traders Academy Club, the academy where we trade on daily basis together, and you are invited of course. So the first pair I would like to go over is the dollar franc, which from my point of view is a wonderful opportunity, and let me just put it here so it doesn't interrupt. Okay, and basically, oh, you know what I need to open? A Epic pen, which I didn't. And we need to draw, right? All right, okay. So the dollar franc, what it does for us, and we went short. On a short view, it was a beautiful leg to the upside. What happened in that case exactly was a double duplication of the Bollinger Band, slightly below. The slowdown started to appear here on the lower time frames. We got this double cycle completed, and the pair starts the move to the downside. Now, natural correction in such occasions after double cycle to the upside is always 38 to sometimes it could extend to the 50%. Basically the idea of this pair is bearish as for now. I will show the invalidation of course. And Darren, you say you can hear me but you can see the screen. Is it better now? Can you see the screen now? Well, I am showing both, so I hope you can. This is basically where we are going to on the short. This pair is in a sell mode until these levels. It could go extended lower, but as for now, that's the target for the short. The only thing that could invalidate such a scenario would be actually this. Where is that? Here. We have here a critical area of the 4-hour chart trend line. So as long as we do create lower highs, lower lows, the pressure is bearish, and every retrace, Fibonacci retrace, two waves retrace, range retrace, followed by bearish hidden divergence is a way for us to look and join the continuation, aiming the daily targets. If we go above this level right here, this is a serious invalidation for the sells, and from that moment the game for the sells is over, and we need to be very, very careful with picking up and trade this pair. The next pair I have on the list is the euro dollar. The euro dollar, as you can see, broke the trend line we discussed about on the previous week, right? And since there, beautiful momentum to the upside. It did reach this action zone, which makes problematic area for this pair, and now also creates for us a bearish hidden divergence. Now the euro dollar here becomes very, very tricky. There are two scenarios this pair could easily follow. One of them is being inside the range. It was a false break on the bottom, followed by bullish divergence, and now we are ready to continue all the way to the upside. And the targets for the upside in that case, if it holds and continues, would be here, which is around 119.50, 120, and the next one could be all the way towards 121, 122. Now the only thing to invalidate such breakout and such scenario from the bulls would be actually by going and false breaking a trend line. False breaking a trend line, such a breakout after bullish divergence, creating this bearish hidden divergence. A false break, which means a close below the trend line, would be a very serious call that the game is over for the bulls, and in that case the euro dollar is back to bearish, and then we would be aiming these targets, which could be below the 115 and aiming possibly all the way of 113, which is a level of this special cycle around a 50% retrace. So that's more than doable, but in order to become bearish again, this pair has to false break it and close below the and close below the trend line. As long as it didn't, the momentum is here, regained, looks good, looks powerful, and the buy pressure remains on. Next one on the list is going to be the pound dollar, and let's move to there. This is our pound dollar, and as long as this trend line holds, not trend line, sorry, the range. Here we go. Andreas, for stochastic, well, for me stochastic is only for confirmation of hidden divergences, nothing more than that. It's not indicator you really want to rely on for your trading, trust me on that. I know so many traders waste the time on stochastic purely. It's really nice visual, especially seducing and tempting when it's above or below the critical levels. That's not what you want for your trading, trust me on that. I know we all look for simple things, not that, Andreas. So the pound dollar, after the first leg down, it went inside the range, and as long as it is below this range, the pressure is basically bearish, and I would expect the pound dollar to go lower. The targets for this lower would be below 130, which is here, and then 128 zone. So from my point of view, it's really great opportunity to look for these sells, especially considering this beautiful special cycle we've had before on a daily chart, special triple, and it looks like we are in front of a second leg to the downside to the 50%. Will that do that? Only time will tell, of course, but technically it looks simply amazing opportunity for that. And the way to trade this one would be to drop to the 4-hour chart and start looking for momentum. How do we gain momentum or regain momentum? For that we have the trend lines, right? The principle of trend lines and the principle of divergences. As for now, this pair, slowing it down between these two very suspiciously, right? And the breakout could be on a 4-hour chart, could be 1-hour chart. Trend line breakout by itself could be risky. So what you would want to do on such occasions is a breakout, hold, and not just a breakout and hold, retest and hold, and retest and hold could be in one way, on two waves, but the idea here is not spike and close above, because sometimes on such occasions we so want it to break and hold, and it doesn't. And if it doesn't, it's a safe from Mr. Market for you. Be careful and consider your positions. That's all. So if it refuses to break the trend line and hold below after the retest, that's a very serious warning sign, which if you are in a sell, you will want to get out and look for your better opportunities. Breakout must be serious, breakout must hold. If it immediately breaks down and retraces within 1 or 2 candle, changes the colors, that's a warning sign, and you better look for the better opportunities. So that's basically it. Or if you want to play a bit more advanced, so after the breakout on the 4-hour chart, drop to lower time frame, 1 hour, 15 minutes, look for 2 waves retraces and let them break. So we basically confirm the confirmation, right? We gain the confirmation on the momentum, so it is real. 2 things we earn by that: 1, confirmation; 2, lower the risk, and that's great for us. Targets for the sell move would be the 130, 128. That's basically where we aim. Break above the range, which is this area, break above and hold above, open the doors for further bullish continuation, and that could start to lead us to completely new highs like 140, 145. So that's the pound dollar and our levels accordingly. The statistically why it's good for sells, if we take a look on the statistical view, we can see that 18, 19, which is actually now, right? It's weekend, yeah, I know. So right after the weekend, it's critical. If the bears take the control, it should happen now. If it doesn't, and if it simply don't gain the momentum, we're most likely gonna be evidence to the bullish direction to the next important highs. You see? Late pop-up from the blog. Oh no. Technical, right? All right, let's continue. Our next pair would be the dollar versus the yen. Now this one rocks. We've been short on this pair, and as I explained, guys, we are aiming the 112, which we did reach right on last Friday. So yoo-hoo! It was a really great call. The thing here is this range. That's the critical range for us. As long as we hold below that, dollar yen is aiming down. There are a few critical things we do need to pay attention to. 1, bullish hidden divergence starts to develop. As long as this low, it's possible for a bearish hidden divergence. If not, we break below this low, gaining new lows on daily chart. That's a serious call, and then what we'll be looking for, of course, is sell rallies. So for us, the main invalidation zone for the sells is here. I would expect the pair to go all the way to the next action zones and critical Fibonacci retraces, as you can see on the chart. And there is a chance that we are now evidence for something like that. If that's about to happen, you got yourself a chance. We discussed about it on the previous week. You get yourself a chance to be on the bearish road all the way to the downside, and you will want to be there if that's what develops. The only thing that invalidates our bearish scenario on the dollar yen is basically this trend line, okay, and higher highs. So if we break the trend line and start to create higher highs, that's a warning sign that we will want to consider our sell positions. And maybe on such cases, it's best to be immediately neutral. We will not want to fight that if we do start to gain higher highs on the 4-hour chart. So that's for the dollar yen. The next one is the euro yen. Euro yen is another great pair. From one side, it completed for us. Where is that? Here. From one side, completed for us exactly that. Triple cycle. Looks amazing. The divergence is there. So basically, as long as this low, the pressure is bearish. The only thing here that was a bit suspicious was the break of this high, intraday high, but you can see it was false break. Broke and retraced all the way inside. The targets for the bearish side are the immediate targets would be here, the action zones, but then the most important targets, of course, the 38 and the 50% of the daily cycle. So if the euro dollar would, the euro yen, sorry, successfully hold the lower highs that it is regaining right now, we are aiming all the way to these targets that I just spoke about before, or the Fibonacci retraces. If we break this trend line and well, it's not a trend line yet because we don't have yet lower lows, right? But if we do break these highs and it all turned to be a fake bearish sign, that this pair is going to continue all the way to 138. So be careful with these highs. So basically, sell retraces is acceptable as long as we respect that top. And the pound yen, we are aiming beautifully on this pair. It was a beautiful run as well. Lower highs on the 4-hour chart as well, which I will show. This is a critical area right now, which we must break below. If we do, we are going to the 146 zone and then 144 zone, and then a classical magnet area around 142. Magnet area means a combination of several cycles, several different measurements. Now on the 4-hour chart on this pair, what we can see is the critical area right here, and you can see it has a big problematic time to break it. The only good thing here is for now is the fact the highs are going down and the lows are going down. They are going slow, but they are going down. So as long as this trend line holds and we don't have higher highs, this pair remains bearish. If we do get higher highs and trend line is broken, game is over for the bears. Bullish momentum returns to the game. Next pair I have on my list is the dollar Canadian. Dollar Canadian is very tricky, especially from Friday, which it normally does on Fridays. After the triple cycle down here and the retest of 50%, it created the 50% retrace in 2 waves and action zone meeting. From here I expect it to go lower, and basically as long as it is below this high, my view on this one is bearish. And the way to rejoin that would be, well, actually it was a trend line here, broke and failed. You can see that there was no momentum, but now the trend line is still here, the momentum is still here, the opportunity is still here, the divergence is still here, and so the levels, right? So the first bound was from the action zone right here. We do need to break the trend line, we do need to break the action zone to gain the well, further continuation. If it does that, 125.90, and then this is the critical area from my point of view, the 125 zone. It could go even slightly below that, as you can see from this pair, but for me it is bearish, and I would remain bearish as long as we are below the daily top, which is right here. So for me, every 2 waves retrace, every trend line breakout to the downside is an opportunity to start looking for the sell setups. And as per statistics, we can see this, we have the confirmation here, and this confirmation is coming right here, 21st, 23rd. That could start happening right at the beginning of the week. We did have a bounce on 16, which actually was right here, and you can see it has problems to hold above it, right? So both action zones hold, the statistics hold the top. That's what makes me feel very bearish about this opportunity. Okay, the next one on the list, just a second guys. My picture disappeared. I'm back. Next one is Aussie dollar. Aussie dollar, read my lips, is coming to, how to say that correct, critical period. We are in front of a bullish run, which most likely will take place at the second part of this week, maybe the end of the week, and goes through the next weeks. Why? Because look at these several cycles, guys. It is amazing. We have this cycle, and our expansion is, we have a critical magnet right here. We have this bank area, which a lot of money are protected there. We have a bullish divergence developing here. Slightly amazing. And the best part is, even if it's not happening around the 075 zone, we have the 073 zone, which is not less critical. So we are going for a bullish scenarios on the Aussie versus the dollar, and the way to do that is also we have a confirmation. Check this out on the statistics, and it starts right here. Oh, what happened with my dot? It happens right here on the 20s, right? After the 20s, we can see very serious dates. So it's building down, and we are going for a serious retrace. So stay tuned here, look for higher highs to be created. Here we would want to go to the 4-hour chart, right? We want to see these trend lines created on the lower time frame. What's going on with my pen here? Okay, here we do want to see the trend line breakouts. We will want to see false break gained here and higher highs to be created, and in that case it simply would be a perfect call for something like that, higher highs, and start looking for the buys opportunities. The opportunity here should be amazing. It should form itself on the coming days, but once the bottom is closed, you can see that and sense that. Don't try to be a hero, because many traders just jump in for whatever the reason is. Don't try to do that, it's not too smart. Look for the evidence, false break, trendline breakouts to the upside. That's your call you will want to start and apply. Next one is the New Zealandian dollar, which basically the same. As you can see, we have a magnet area right here and this triple cycle. It cannot be better, it cannot, and I repeat, it cannot be better. It's an amazing place. Bullish divergence is forming. Do not blindly attack and say, oh, it looks good. It's not, right? Trading is always in three steps, always. Level, confirmation, setup. Level, confirmation, setup. If you miss any of these three, this is a trap by the market. As simple as that. Your chances to lose money in that occasion is much higher. So from my point of view, we are in front of a critical area, as you can see right here, guys. Very powerful action zones where I would start looking to go long from. And for those of you who are short, especially from the Traders Academy Club, those who went short with this trendline breakout and the fact that we went lower lows here on the 4-hour chart, this would be a great place to start and book your profits. So that's for the New Zealand dollar, which also have statistical confirmation for us. As you can see, it suggests for us these days, as you can see, guys. Really critical period. Be ready. Bulls most likely will wake up. Now this one is amazing. Aussie, Euro Aussie, after breaking this high from the daily chart and holding this, as you can see, goes through this action zones. This pair is ultra bullish. Could aim all the way towards 159, 160. From my point of view, it's extremely bullish one on a daily chart. The divergence was broken. It was brutal. The trend line holds here pretty classically, right? And also the higher highs are broken now. Really amazing. Expansion of this cycle take us towards here, which is 159, 160 zone. It's not, here we go. Now you can see that clearly, and okay, and that's our zones to watch. You can see this critical area, the cycles duplication, right, are right here around the 159. So basically every retrace to the action zones here or here should lead us for further buy opportunities. So eye on the Euro Aussie, which is really great. Gold, we were bullish in our view. I remain bullish in my view as long as we hold above this one. The commodity creates higher lows, higher highs, and now broke these higher highs. It really looks good for me. The gold is aiming all the way to the next action zone, so I am bullish there as long as we hold the trend line and we don't suddenly create lower lows, because that would be a warning sign. So it is bullish for me on gold and on silver. Same principle, same idea. Broke this little range we had, and that's the critical action zones currently, but I expect that to continue all the way up. 118, 120, here we come. As it looks right now, invalidation is the break of the trend line and the creation of lower lows. If it starts to do that, warning signs, stop looking for the buys. That's for the silver. Oil, I remain bullish. I told you that many times, guys. We reached the first target, which was the 57 area, 58. Now we are aiming the 60 most likely. For me, it's bullish. This is the invalidation level. If it breaks it, game over for the buys. I would not be looking for long-term buys anymore. As for now, I am holding my buys from here. That's our buys from the Traders Academy Club, and I'm aiming the 60 area. And currently there are no bearish evidences, despite a little drop down. Break below this little drop down would be a warning sign, but as long as it doesn't do that, we are bullish. We are bouncing from the action zone, we are bouncing from the 20 MA. Bullish hidden divergences here, simply perfect. S&P, well, this one is tricky, but I'll make it simple. Okay, as long as it holds these tops, look for sell evidence using any of your strategies, of course, for the sells. We have action zones holding right here and right here, and I would expect on the short term continuation towards these areas. Break above the last high, which I showed, and game is over. We don't need to deal with that. As long as it holds, the bearish pressure is on for the S&P. And the last one on my list is one of the new exciting things. That's the Ripple cryptocurrencies. On the previous weeks, I have been talking about Litecoins, Dash, Ethereum Classic. They all fly amazingly. So I hope, guys, you enjoy these opportunities. If you don't believe me, go to the previous videos and see yourself where we made the calls to go long. And in this one, oops, sorry, in this one the bullish run still didn't start. I believe it's going to happen by the end of the year. I see that much higher. This is a critical level, so if we manage to gain the momentum above that, I see new highs even above the 050, which could double it. Of course, the critical level here would be this low, so as long as we are below that, for me it's a great buy opportunity. One of those that still didn't move, and I expect them to move. I might be wrong, of course, but I do suspect and expect this one to be the next star. I know I'm not alone, of course, but I know many traders are really afraid of such opportunities. No one knows where it goes. All this beautiful new world, new financial world is going. One thing is clear: there will be changes, there will be regulations this or other way around, there will be exceptions by the banks, maybe there will be new digital currencies by the banks themselves. We are going for new financial era, guys. We want it or we don't want it. All this new ICO that every day happening, everyone go and create his own currency, that's a big bluff. That will stop this or other way around. When and how, I don't know. But with the big guys, with the big technologies and real principles of currencies like Bitcoin, like Ethereum, like Ripple, these guys are most likely here to stay, and the risk compared to the possibility, which is unlimited, is huge. So for those of you who are looking for long-term investment, that could be one. Little tiny investment could become massive. If you simply afraid of such opportunities, just skip that, let it go, and stick to the normal trading. Nothing is wrong with that. My dear friends, thank you very much for finding the time on Saturday. I really appreciate that. I hope you enjoyed. I hope the simplicity of the chart, we did it right now instead of going over all the cycles, is easier for you, and the things are easier to understand. And of course, your support, your feedback is more than welcome. So if you enjoyed the video, please leave your feedback below the video. And I invite you to join me and my team on daily basis in our live trading rooms, twice per day, trading the market together, planning the putting the charts, putting the levels, putting the invalidation, putting the directions, and trade the setups all together. To join my live rooms, below the video you have the Traders Academy Club link, and I hope to see you there. Thank you very much for your time. and I wish you a perfect weekend and a great rest. I'll see you in the live trading rooms in Traders Academy Club. Yours, Vladimir.